Good evening and welcome to GPA Trading Services webinar event tonight. So pleased you all could join us. Let me introduce myself. I'm Trish N. Albrecht and this is my husband Gary and I, and we are the founders of GPA Trading Services. And we're so pleased you all could join us on this Sunday evening, and let me wish you all a happy spring. This is the first official day of spring, which is very exciting. All of our azaleas are in bloom. It's always a thrilling time. And now, here is a screenshot of our website. For those of you that have not had a chance to visit our website, we invite you to do so at www.gpatradingservices.com. Pop on over and peruse our website and read what we have to say and look at some of the pictures that we have posted. Gary and I are avid travelers. Did a lot of traveling in the recent months and to some exciting places and did a lot of interesting things, and like to post pictures on our website. I have a lot of new pictures I need to get posted at some point when I have some time to do so. Now, next up is tonight's topic. Tonight's topic is anticipating future market conditions in order to capitalize on increased market volatility utilizing the new MPA PE3 software, which is very exciting. And also, for those of you that have been with us and are familiar with us, we always enjoy mantras, positive affirmations, something important to think about, and this is always a very appropriate mantra. So let me share this with you. The secret of success in life is for you to be ready for your opportunity when it comes. Let me repeat that. The secret of success in life is for you to be ready for your opportunity when it comes. Powerful statement, very true. Now, before we begin and jump into the markets, let's go over the disclaimer. As you all know and should be well aware, trading involves risk. So, trade at your own peril and make wise decisions. Do not trade with money you cannot afford to lose. And always trade with proper money management. Use your stops. Do not risk more than you can afford to lose. And all information we cover tonight will be for your educational purposes. Okay? I've covered my portion for the moment. I'll come back on later, but I'm going to go ahead and turn it over to Gary, and he's going to jump in and take you through the markets. All right? So, I like to say, please sit back, relax, and enjoy. And here's Gary. Thank you so much for joining us.
Good evening, everyone. I'm Gary R. Albrecht. As my wife just mentioned, I'm the founder and CEO of not only GPA Trading Services, but I'm also the mastermind and creator of the Market Price Anticipator Premium Edition 3 software. I also educate and instruct everyone on how to use this software. So we're unique that I not only invented the software, I trade the software, and I'm also one that instructs it. So let's go over to the markets and give me a moment as I open up the charts. Okay, for those of you not familiar with the Omnovia/Webinato room, there are a couple of buttons in the upper toolbar that allows you to go to full screen or to fit to your screen. So please utilize those as necessary. I would like to know of this audience this evening, since we have so many that are logging in, how many are stock traders? How many trade Forex, options, futures? Just give us a quick assessment of the type of trader you are, because we have something for everyone. Just thank you for everyone. Please continue to type in your preferences, as we'll cover a little bit of everything this evening. We're going to start off with the euro, as the euro is one of the most popular, widely traded Forex currency pairs. But you'll notice that we're going to show the software. We're going to give you some insight to where the euro is projected to move. So whether you trade it or not, I recommend you trade Forex because it is part of a diversified portfolio and it's very easy to trade. So regarding the euro, we look at a lot of things with the MPAP software, including Elliott wave, trend lines, trend channels, Fibonacci's, and the software will reconfirm or confirm whether you're looking at price patterns, candlesticks, I don't care what you use or have used in the past, whether it's been successful or whether it's not quite as successful as you would like. When you add the MPA-PE3 software to any of these technical parameters, it makes it more accurate. So we'll pick up with the euro. The euro is in the middle of a little correction. The bias is that this little euro that's grinding higher, as I've been telling our students, I don't think this correction is over. I still think the euro has further to go. A key level to watch is going to be its previous swing point up here at 113.74, 1.1374. If we're able to break that, then the next major resistance is up here at 117.12. Well, if you're an Elliott enthusiast, we do go over Elliott wave count and potential moves that are projected within the Elliott wave forecast. But more importantly, as I look at the euro, how do we know whether or not at this moment in time, Don, if this correction is over and we're part of a 2 going down in 3 or a C going down in D, forming this big wedge? How does one know? Well, that's where the software comes in and give new insight to whether this move up is over or it's still going to extend further. And let's go, speaking of which, to the software. And we'll start off with the MPA-PE3 software on an Ichimoku template. Right now, and the reason I don't think that move is over is looking at the weekly. I'm going to call your attention to two areas. We have what we call the trend momentum, or TM, and we call this other indicator the price action indicator, or PAI. And the key is whenever both the trend momentum and the PAI are moving in the same direction, price moves in that direction. So as I go out to a monthly view, we can see that the euro long term has been in a downtrend. We're getting lower highs and lower lows, and we're getting lower highs and lower lows, lower lows, lower lows, lower lows, lower lows, and repeated lower highs. Well, this is where we start to form what we call a trend and a channel. That we see, yes, the euro has been in this channel for years now. And how is that going to help me whether or not this latest little move is going to allow us to move all the way toward the top of the trend channel, moving up towards the 130/131 range, which those of you that do trade Forex, we're sitting in 112. So that would eclipse over a 2,000 plus pip move. From 112 to 122 is 1,000. From 122 to 130 is another 800. And we've already moved a few hundred pips off the bottom since we bottomed out at 104. So we've moved about 800 pips there. So that's where we get a total of 2,600 total pips if the euro is going to rally that far. Well, so far we do have some support behind that claim because the monthly trend momentum and PAI are both pointing up. We notice as we go to the weekly trend momentum and PAI are still pointing up. So when I look at a monthly and a weekly, both telling us that price action says the euro is going to go higher, then that's why we believe this latest little retracement is not over. Well, currently the daily is moving in towards overbought territory, and it's likely to start to turn over as it did last time. Well, students of mine that were in class, we talked about once the daily turned over, we're expecting a correction down and then ultimately another push higher. Well, simply the cycle of the daily went down. Now the cycle of the daily is going up. It makes it easier as a trader knowing what direction I should be interested in trading ahead of time before I just randomly go short or go long any currency, stock, futures, commodity. It would be nice to know what direction it's likely to move. And we trade it all the same. So with the weekly still pointing up, my daily in the past has done what? It's turned over and started to try what we call a slingshot. And this slingshot phenomenon has to do with the cycling time frames. Tonight you'll hear me reference slingshots. Slingshots are a proprietary trading methodology we incorporate into our educational model and as well as our unique custom software. Slingshots play a major role in our trading. They are a key component. Well, part of this process of what are slingshots, again, I'm not going to go into the total definition of how you anticipate. It's simply about the cycling time frames. So I will point this out. When this daily started to try and change direction, trend momentum was up, but the PAI started to turn down, red, blue, and green. we expected this down move to fail and ultimately end up with a higher low and a higher high because it was unfolding. The weekly remained pointing up. So just remember this as I go over many other currencies, stocks, futures, gold, silver. So as we move on, we're going to show you the S&P. Similar as the S&P ready to top and roll. And by the way, is the S&P bullish to break all-time new highs and continue higher? Or is it about ready to reverse and crumble down and stumble down hundreds and hundreds of points? We'll go over that shortly. So please remember the basis of this. We're looking for the direction of the trend momentum in the PAI when it goes up. Well, how do we anticipate future market conditions utilizing the software? By simply looking at the direction of the higher time frame, and as the lower time frames start to cycle against the higher time frame, we'll notice whether or not it's going to change the outlook of that euro weekly, or is the weekly going to say, no, daily, as you try to turn back against me, I'm not interested in turning over. I'm going to continue to go higher. So we know this is a buying opportunity when that slingshot that was engaging disengages. We can see that across the board here on the weekly. When the euro was in this massive up climb for years and years during its move all the way to 161, 140 most recently, as the correction went through, the weekly kept slingshotting higher and higher and higher and higher. Why? Because the monthly trend momentum in PAI was up here. And as our classmates, we made hundreds and hundreds, even thousands of pips on the euro decline during the period in which the monthly turned over, the weekly turned over, the daily turned over, and it managed to slingshot its way down over and over and over and over and over. And all this is by simply looking at direction of two indicators. All right, let's move on for those of you that do not trade the euro and Forex, but I will leave you with this. I'm going to be watching the euro. If the euro monthly and weekly continue to push higher, meaning the trend momentum of the PAI continue to push higher, and the weekly, as my daily turns over the next couple of days, my weekly says no, my monthly will say no, so then the daily is going to turn over and slingshot higher. It has no other choice but to either turn over and force the weekly to go down with it, or it's going to turn over and say no, weekly says nope, the daily will be forced to slingshot higher. And those are very high probability trades when that unfolds. And you'll get trade alerts to tell you that when you join the service, that we tell you, hey, the euro's daily's turning over, the weekly saying no, you're going to buy that daily slingshot and you're going to shoot for these targets. So with that in mind, as I went through an initial conversation, the euro is at a very strong battle zone. It's a former trend line that's holding. If it goes on to break 1374, then we're going to look at, obviously this is not complete and it's forming to complete here. Well, what if we go on and break 1712? If we go on and break 1712, then you're going to start to focus on this monthly, and we're going to start to focus on, if we're able to break that 1712 previous swing point, then my next target is 122. About 500 plus pips from there, and that's roughly 1,000 pips from where we are now. And if we break this level of 122 and my monthly continues to move from oversold towards overbought, then guess where we're headed? Up here to 130. All right, so let's move on to the S&P. Everybody loves to trade the S&P. S&P is on a bearish bounce. I do not think this is the end of the bearish move, and I don't think that this is going to move on to new highs. I think the S&P still has some limited upside still to go. My first two targets for the S&P are going to be 2050, followed by 2080. We're sitting at 2033. We're in the midst of subdividing wave counts for those of you that like Elliott wave, and we're in the midst of stair-stepping our way towards 2050. Once we break that, we should pull back a little bit and then break on up towards 2080. We're looking to finish this move, end in a lower high, and not break our previous swing point sitting up at 2133.50. So if you're using a different charting platform and say, well, Gary, my S&P is not at 2133.50, its high is represented at 2134 or whatever that number is, put your red line across that swing point high, and this bearish bounce, which still has a little legs left to go, should end up with a lower high than a lower low. And why do we feel that we're still not finished? Why isn't this the end of the road and we're going to start to crumble and head down now? Because based on the software and the overall alignment of that software, it's not ready to give up. We're looking at the weekly. The weekly trend momentum and PAI are still up. Yes, it's starting to move in what we call overbought territory, but it's not over. And why do we feel it's going to end up with a lower high and then go on and move into a lower low? Because as we go to the monthly trend momentum and PAI are moving down. So when I have a monthly moving down and a weekly moving up, it's going to force this weekly to turn over and ultimately slingshot lower in the coming weeks. So why do we still feel we still have some left to the upside? The weekly hasn't turned over yet. And notice the daily. The daily's been doing what we'd expect it to do. When my daily moves from oversold towards overbought, it tries to turn against that weekly moving higher. It's forced to slingshot higher. Then it tries it again. It's forced to slingshot higher. So I suggest and anticipate in advance that yes, we may see a little sideways to lower movement, slight lower movement, and that it's ultimately going to slingshot higher in the coming days as we move toward that 2050/2080. And based on this Elliott wave, subdividing wave counts, once we get towards 2080, I'm then going to look for about a 3 to 5 day sideways to lower decline before then pushing higher one more time. So this should end up around 2080, then have about a 3 to 5 day retracement, and then which we slingshot higher towards this previous high of 2133. As far as the targets, I'm shooting for 2100 first and then 2120. I know it's getting close to this 2133, but that's the whole point when you look at this larger degree wave 2 count. Many times it's a very deep, steep retracement, and it makes everyone nervous thinking, well, this thing is absolutely going to break the high and it's going to go zooming way up here. Well, that's when everybody starts to jump on board and go, the decline is over. That market retracement is done. We're back to the bullish market. Nothing about this bounce and rally has changed the indicators on this software to say this is a bullish retracement continuing and expecting a higher high. Well, what if it is? Well, then I have a target for the upside of 2,500. This would take approximately 2 to 3 years to reach this 2,500. It's not just going to go zooming straight up there. It would stair step its way. And as you always notice on any chart, whether you have software or it's just plain candlesticks, price always moves in a stair-stepping affair, whether you're in an uptrend or a downtrend. And that's due to the cycling time frames. And the easy match, and to see that, is when you take the higher time frames and you go looking at this and say, well, yes, we had the huge trending market crash, we plummeted, our monthly went from overbought all the way to oversold. In the last year, since the Fed's been interceding and buying the debt, yes, we've rallied immensely and continued for several years. And notice when the weekly and the monthly moved to overbought, it kept that phenomenon slingshot higher and higher and higher and higher and higher. And guess what it's recently done, ladies and gentlemen? We've slingshotted higher the first time here and finally failed. That's a huge development. And as our students know, whenever we see this phenomenon of a slingshot failed, that's what we call a price pattern reversal. That's a high, that's a low, that's a lower high, and as it started to turn and hook out and fail, we knew that price in a high probability was going to make a lower low. Well, we've done that again. I suggest we're going to make another lower high and yet another lower low, as my monthly is still headed down. But you see the process. So once the weekly moves in the overbought territory and the monthly stays up, the weekly continues to slingshot higher and higher and higher. Now we're in the midst of the weekly starting to turn over. So for those of you trading the S&P, look for this to drift a little sideways to lower while my daily starts to depressurize. We call that, as it's an overbought territory, starts to depressurize. The PAI will start to turn back down, and I'm going to watch how that weekly reacts. If the weekly stays up like it did here, we then buy that daily going higher. And it does it again, we buy the daily going higher. Well, until then, my daily may stay flat to up. So then, over the next 24 hours, coming in tomorrow's trading, I would look to buy this 4-hour slingshot back up. And if we do go on to break that high, which is at 2042, where's it going to go? 2050. And we may see 2050 hold and pull back again, so we have an opportunity for a few more slingshots over the next few days. Eventually this daily will turn down and take a few days to depressurize. It took about 4 to 5 days here. We're going to see that again, and I suspect we have one more of these daily slingshots back up to ultimately finish that little wave 2050 back down 2080, maybe to 21. And then once this daily turns over, and I see at this point the weekly turnover, that is it, and we're going to start to stair step down in the coming weeks. So pay attention to that in the coming days, and you'll see that if you had the software, you would be able to anticipate this in advance. Watch it move slightly sideways to lower as we move into tomorrow. Then it's going to slingshot higher and make a move towards 2050. Difference in colors. This is Ichimoku, so it's difference to support and resistance lines. We can get into that later. But as far as the lines on my chart here, they're just basic lines of support and resistance. I manually draw in, and this is what I use to give our students the targets to shoot for. Our first target is 2050. That's this green line here. Our second target is 2080. And we have one rule in this trading world with the MPA PE3. You don't trade without alignment of your 4-hour, 1530, and 1 hour. We call that the foreman. It's the gatekeeper between the lower time frames and the higher time frames. And the workforce, the 1530 and 1 hour, is what gives us our buy and sell cycles. All right. So, any other questions on the S&P before we move on? Again, I suspect in this bigger picture, we're going to get a lower high and a lower low. And when do I call this over? When will I say this retracement is over? When the weekly turns over. And at which point, I'm expecting the weekly not only to turn over the PAI, but this trend momentum to flip back over and head back down like it did last time, and go on to make another lower low, from a lower high to a lower low. And it will ultimately continue in the direction of the monthly, which is still moving down. So that's why I suspect we're going to see another lower low, and we'll continue to make highs, lows, lower highs, lower lows, lower highs, lower lows for as long as this monthly stays down. Well, Gary, what if it tries to turn up and does this? Well, we'll see signs of that. When my weekly turns over, if it's unsuccessful to do it after all these weeks of this bullish bounce, in a bearish degree, right? It's a bearish bounce, but it's been very bullish for weeks now. It's been unsuccessful to force the monthly to turn, and we've already seen the monthly slingshot up once and fail. So what do we know? Once we ultimately fail and it turns and hooks down and continues, we're going to see a lower low below 1800. And for those of you keeping score, well, Gary, once I break 1800, what are my targets? Once I break the 1800 previous support, we're shooting for 1730, then 1647. And we're going to stair step our way down here, ladies and gentlemen. Price never moves in one direction. It always stair steps, and that's because of the cycling time frames. So that's why the software is so unique. Price doesn't move without the cycles and the time frames. So when I see a daily, a 4-hour already starting to head down, price is not going to go zooming up here without the time frames changing directions, and aka slingshotting higher in that case. Let's go on and look at gold. Gold's another one that's caught everyone's attention. Well, some are saying commodities, in the case of gold, has bottomed and reversed. And we're in what we call a multi-year, for those Elliott wave enthusiasts. If this is our super cycle A complete, and we're moving up in B, then it could last upwards of 5, even 10 years of a bullish move on gold over the next 5 to 10 years. Well, I'm not convinced that this is a guaranteed bottom reversal yet, because I haven't seen enough signs and symptoms for this to call it a absolute bottom reversal. I'm not saying you should be selling gold. We buy and sell gold and make a fortune. You can ask our students whether you trade spot gold or you trade ETFs, GDX, UGL, however you want to trade it. You can trade it and utilize this software to tell you when I should be on the short side of the market, when I should be on the long side. So the reason I'm not convinced this is over, and I'm giving targets ahead, once this correction is over, I still think we have further upside to go. And my next target above this 1280 area is going to be 1317, followed by 1339. Well, the question is this 1280 going to hold and we still need a deeper retracement first? Or is this already over and we're in the early stages of stair-stepping higher? Well, that goes back to the software. When we look at the bigger picture, the monthly is clearly up. Right, well, Gary, the monthly's been up many other times during this big multi-year decline, and many times it's been up and it's turned right back over and slingshotted lower and lower and lower and lower, and this could be no exception. But while we're still in an up mode, we got a monthly trend momentum in PAI up. We have a weekly that's moving into overbought territory. This is when this up move starts to earn its stripes to know whether or not this is just a simple deeper retracement that we haven't had quite this deep in some time, and yet another lower low that's on the way, or is this ultimately going to end up where this is the bottom reversal and this weekly is going to turn over like it's starting to and then be forced to slingshot back up? What does that look like? That looks like, when I turn the auto scroll off and go back in history, when we were in this massive uptrend, it's going to, it's been many years, but when we were in this massive uptrend, what did our weekly do? When it got to overbought territory, it kept slingshotting higher and higher and higher and higher and just kept going and going and going. Well, that's the sign and symptom we're at now, because the weekly trend momentum and PAI are clearly up. No exception, no ifs, buts, or ands about that. But is it up in the sense that it's going to continue to move from this oversold territory and go all the way into overbought territory? Or is it going to be forced to slingshot back down? So we're in the middle of this, and with gold in the next couple of weeks, as we see this weekly start to turn over and start to head lower, is it going to be a reversal back to new lows, or it's going to be a reversal giving us the low, the high, the higher low, the higher high, another higher low, and then ultimately another higher high? So what should gold prices be doing in the next few days? Well, here's an example. When gold the other day rallied back up and did this big slingshot on the daily, it failed and it's turning and hooking out. That is a very bearish sign. Why? Those of you that like price pattern reversals and looking at candlestick formations, we have a high, we have a low, and we have a lower high. High probability gold is going to go on and stair step lower and make a new low. So we end up with a true high, low, lower, low, as my daily continues to push lower. Well, we make it simple. Whenever my daily trend momentum and PAI are headed down, I'm not interested in buying unless I'm going to scalp something. I'm looking for an opportunity to sell a rally so that I can take advantage of the downward direction. Well, Gary, it's headed down at the moment, and my weekly's barely starting to show any signs at this moment. Looking at the PAI, it's starting to slightly hook down. That tells me, while my weekly's starting to go down and my daily's turning over, headed lower, we're not busting up this way yet, right? Not yet. The only way I could possibly go on and break 1280 and go to my next target of 1317 and up to 1339 would be for this daily to change directions. We need the daily to absolutely change directions. Not only the PAI start to turn back up, but the trend momentum cross and head back upwards. And if we don't see that, then I guarantee you're not going to break 1280. If it does go on and turn and then switch and turn up, then we're going to shoot for 1280 as our first target, then 1317 as our second target, and 1339 as our third target. So again, this is the big time role for the weekly. Is it going to influence the monthly to turn over as it has so many times previously? Or is this monthly going to say, no, I am not going to turn over. So weekly, when you do depressurize, as we call it, we're going to depressurize to then slingshot higher on that weekly. Like I showed you as I went back in time on this chart, the weekly can slingshot higher and higher in the direction of the monthly. That will be a strong sign and symptom that this is a more than just a simple deep retracement. It is a trend reversal from that A wave going up in B and should last further and longer, much longer. So that's why the software will anticipate in advance during this decline, is it end all be all and new lows? Or is the monthly going to say, not having anything to do with that, I'm going to get a little retracement down, yes, but I'm going to force this weekly to turn back up and make a new high. You can notice about 2 weeks ago, we had the same principle where the weekly started to turn, my daily slingshotted higher and forced the weekly to go back up, and we made a new higher high. So as my weekly was headed higher, what did it force the daily to do? Slingshot higher and higher multiple times during that climb. And here was the last one that went higher and made that higher high. Well, this again, now that we have a high, a low, and a lower high, and the daily has failed, we call that failed because it failed to make a new high. It made a price pattern reversal. Gold's going to move sideways to lower, and that's what I would look to trade, because not only should it move sideways to lower, but the daily trend momentum and PAI are down. And as we watch this, what do we see? The 4 hours trying to move from overbought to oversold, and it's trying to slingshot up. It's failing, as it would expect it to. Why? My daily's headed down. 4 hour trying to go against the daily is going to fail. So this will turn, and watch this. We call this painting the Picasso. So you're going to watch this that's turned up here. It's going to flatten out, turn back down. This red that was turning up is going to be turning and hooking out. And we're going to see this PAI move from overbought toward oversold. And this trend momentum move from overbought towards oversold. And that's going to help continue push this daily further to the downside as gold starts to move sideways to lower. Now, I'm not calling this a top and reversal because we got a price pattern reversal. This is simply part of a deeper retracement for now, up and until that weekly proves itself by either, if we go on and make a new lower low, then this wave 3-4 correction is still unfolding. Well, we could go several dollars lower and still have a nice deeper correction before we go higher. So I'm not going to call this move over in a top and reversal and looking for new lows up and until I see that monthly turnover. And if we don't see the monthly turnover and the weekly depressurizes, then in the coming weeks you're going to have a very strong trade to buy that weekly slingshot higher, as gold will move from wherever it is when it starts, shooting for 1280, then 1317, then 1339. And watch how these levels play out in the coming days. Once that weekly finishes depressurizing, my daily moves down and forces the weekly to turn back up. Because if my monthly says no, remember the higher time frames rule. So if that monthly says no and does not turn over as the weekly's turning down, then I guarantee you're going to see this weekly depressurize to slingshot back up, making a new high headed towards those targets. Black gold, Texas tea, the Beverly Hillbillies, as I like to call it. Oil prices have been on a nice bounce itself. Many out there, I've heard those gurus out there say, oil's going to be at $5 a barrel. I have $10 a barrel. Well, is this over, or is this simply a retracement? I still believe up and until we see price start to take out some critical levels like $50 range, that this is simply another bearish bounce, and it ultimately is going to turn over and head back lower. Well, I gave our students a $26 target a long time ago, and price managed to reach our $26 target before reversing, as we said it would reverse, and we're looking to see how long is this correction going to run before it's over, or is this some major bottom reversal, and commodity as far as oil prices have now reversed, and now we're going much, much higher. Well, that leads us down to watching the cycles. And as the cycles, our daily is just starting to top and roll over. Recently, it did slingshot higher, as we called for in our classes. We gave targets for the price to run to 41.20, right at that 41, 41.20 range. It ran to 42.60 42.46 was the high here, but it went right to our target zone and then reversed. Why is that? Because as we were headed towards our target zone, the time frames are starting to top and roll. So I will know whether this is true a reversal or is this going to give us another little blip before another higher high, watching the cycles. And my daily is overbought, but again, it's been overbought several times and it was forced to go higher, forced to go higher, forced to go higher. Well, is this the writing on the wall where it's going to be forced to go higher yet again? Well, that's where we lead down to this weekly. The weekly is still currently up, but as my daily starting to turn, I see a little sensitivity. Hadn't quite turned yet, but the red starting to hook, blue line starting to change angle, and even green money flow starting to change. Well, that's not a guarantee it's not going to go higher, but I'm continuing to watch it. So my bias on black gold is look for it to move sideways to lower like yellow gold, because our dailies are starting to top and give us a little depressurization. Our 4-hour is clearly moving down with angle and separation, so that's why oil prices will continue to stair step lower up and until this daily starts to either turn up with the 4-hour or continue down. That's what we call line of progression. The time frames will always cycle, ladies and gentlemen, from oversold to overbought, overbought to oversold, oversold to overbought, overbought to oversold. The only time that cycle is ever interrupted is via this slingshot phenomenon. And how do we know when it's going to engage and form and when it's going to not and continue lower? It's based on the lower time frame cycling up. So if this 4-hour continues to move from overbought to oversold, there's no way that this daily is going to turn back up. When does it turn back up? When the 4-hour bottoms and reverses and heads higher. That's when that daily turns and goes back up. So notice this. I'll just draw a little line here. The latest one we've been watching. We've watched it several times as the daily started to move from this oversold territory and depressurize down from overbought toward oversold, depressurize to then slingshot higher in the coming days, because my weekly was still up and my what? My daily started to go against a weekly saying higher, and it forced it to go a little bit higher. So here's a couple of them. You'll notice when the daily does turn over, why does it decide to change directions? It's when the 4-hour starts to bottom in reverse. And from that swing point low when that daily started to process, my 4-hour bottomed in reverse. And when did this latest one do the same thing? It was a much smaller in size, but when did it start to reverse and start heading back up? My daily was depressurizing until the 4-hour changed directions. And notice it started to move lower until the 4-hour started to change direction. It forced the daily to go higher. And we anticipated this in advance because our weekly is still up. How easy that is. I just simply got to look left and right. And notice between the two red lines. Red up, blue up, green up, trend momentum 1 and 2, both are up. So that's why when we get what appears to be, is this the top and reversal? And is that little retracement at the end and we're making new lows? Or is this just going to be a temporary retracement before going higher? And another little retracement before going higher? And another retracement before going higher? So again, you simply look left and right. How awesome the software does. If this doesn't turn over and flip, then you're going to see this daily depressurize and then go back up and make another higher high. So I can't say this little move to our target is now over. I need to see the daily start to move from overbought to oversold. And I will say this. If this daily right here, trend momentum moves from overbought to oversold, PAI moves from overbought to oversold, then absolutely you're going to see this weekly turn over. And absolutely we're going to call it the end of oil prices rally and the beginning of a downtrend continuation that we're going to head back towards $26. That's our previous low. I have a target for gold, as black gold, sitting between $12 and $14. We just need to worry when this is finally over, we can start to talk about looking for downplaying this up move, retracement's over, and we're looking for this Fibonacci retracement. Now again, we do use Fibonacci's in this class. We use it all. We give you a well-rounded education. And this is particular of interest because it's showing resistance up here to 61.8, right where our 141.50 range was for our target. Well, that doesn't mean it's quite over yet, but it could be. So I will tell you that I expect to see black gold move sideways to lower. Hint, hint, hint. It's not going to go zooming up here just yet. It's going to move sideways to lower while the time frames are moving from overbought toward oversold, daily, 4 hour, my workforce, all moving down into oversold. And once we get down in oversold, that's when we'll go back to this daily and say, okay, daily, now that you're headed lower, are you going to take the bait as I start to go higher, or are you not? If the daily stays down and the 4 hour turns over, then we're going to look to sell 4 hour slingshots lower. If the daily starts to turn up when the 4 hour turns up, then we're going to, wherever we are, we're going to look for another higher high, shooting for that 41.50 and above. So where's the danger zone for black gold? That's up here at $50.89. Because part of this 1-2-1-2 scenario is this wave 2 cannot go above this 50.89 top. And as long as we make a lower high below this 50.89, I anticipate we're going to end up with a lower low, ultimately headed down towards $12 to $14. But of course, you don't just start talking about I'm at $48 and we reverse there, and all I'm thinking is I'm going to stay until I'm at $12. No, price is going to move down and back up, down and back up, down and back up in a stair-stepping fashion as black gold went down from this 150 range all the way to 26, and from 26 all the way back to 41. But again, if I had to guess based on the cycles that we're going to end up with a lower high and a lower low, I would say absolutely. All I'm waiting for to get into a short position on black gold is wait for that weekly to turn. And in the interim, I can scalp this down because it is going to go lower, but I need to see that my weekly is going to turn with the daily before it does. Otherwise, forces the daily to say, nope, I'm going to go back right back up and force you to go one more time. So when we were in the midst of these little retracements, I was telling everyone in our class, hey, black gold is not over and we're not going down here. We're going to reverse and go higher. So we type in on here, we'd say buy the next daily slingshot. And when do we know the daily is going to engage? Well, Gary, how do I know if it's day 1, day 2, day 3? It's based on the cycle of the 4 hour. When that 4 hour bottoms and reverses, that's when the daily is likely to start engaging. And that's what we're going to be looking for. So until that 4 hour gets into oversold territory, I expect to see a chopping up and down, sideways to lower direction. And my first down target sitting at 39.34, followed by, if you follow Ichimoku, each line, the next line is 36.50. We could easily see this retrace, slingshot higher, retrace, slingshot higher, or start to break down because the daily's moving from overbought to oversold, and the weekly has in fact started to top and roll. So you'll follow up with this later and we'll tell you whether that's a top and reversal or it's still expected to go a little higher based on this weekly. Will it take the bait and go over, or is it going to say no and force the daily to slingshot higher, 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 and yet one more time higher? Let's look at some massive, back to currencies. There's some massive trades setting up on a couple of currency pairs. So again, options traders, you better start trading Forex. That's the most liquid market on the planet. And we have some massive moves setting up. And this is part of a Fibonacci retracement. The euro/New Zealand dollar has been in a multi-thousand pip retracement down. You want to call it a top and reversal. It's been bearish for years. Now we're getting in the early stages of a reversal. My monthly reverse, we went up, it's starting to push lower. It's already starting to show signs of turning back up on a monthly, which remember, when you're in these long-term downtrends, the monthly will turn and force it back lower. In this case, it was moving lower, turned up, and then slingshotted lower, 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 lower for months and months and months and months, ultimately settling down here for new lows. Well, is this the beginning of a monthly starting to slingshot higher, 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 and higher? Well, notice, those of you with Fibonacci's, from the swing point low to the current swing point high, we're right at a 61.8% retracement. If you know anything about Fibonacci's, they have relationships. Not only in the numbers, but depending on how far it retraces, you can anticipate how far it's going to go in the extension. And for those of you keeping score, if we get a sweet spot retracement, what I call a 23.6 to a 61.8, if it retraces to this zone and our software is giving signs to continue to go higher, then we're going to continue to go up and break the previous high and ultimately go to a 161.8. Well, if I go down to 78.6, then it's going to go to a 127. And if I go down to 88.6 and get a very deep retrace, then it's going to go to a 118. That's just the laws of physics and the laws of Fibonacci's, that yes, there are times it does not 1,000%. In every case it does this, but as long as we keep above our swing point lows and our software continues to tell us we're going higher, you betcha. That's exactly where we're headed. So pay attention to the Euro New Zealand. I sent a trade alert out last week to our students. We made some nice movement on this bounce so far, and this is the early stages of that bounce. So not only is the monthly starting to show signs of turning back up, but my weekly is in the early stages of what? A very important development. It went from a slingshot down to fail, and it's turning and hooking out. In our class, we call that the Kraken is released. When a weekly slingshot fails, it's high probability it's going to go on to make a run back toward the previous high, and a high probability it's going to go higher. So I'm keeping a very keen eye on this at this point, because at some point we are going to get this reversal and go higher. It's evident based on my weekly still starting to fail and go higher, and my daily has just recently failed and turned and hooked out. That is a buying opportunity, and that was one of the signs we gave last week. We did it twice. When the daily engaged, buy it. We gave you targets, made 150 plus pips. Now we're looking for another target back toward the previous high, and the second target is sitting just a little bit higher, shooting up at this one previous high here of 168.69, and the next target of 170.18. 170.18. So it's about 335 pips. So all we need to do when we're trading any symbol, stock, future, commodity, Forex, what did we know about the 4-hour bottoming and reversing? That's part of the buy zone. And yes, we're getting a little bit of retracement. Those of you that eat Ichimoku, that's support and resistance. It should show a little resistance here before breaking and going higher. And my projected path for this Euro New Zealand is that we have bottomed and reversed here, and we're in the midst of a long-term multi-year retracement minimum and reversal of direction. So any downside should stay above this previous swing point low at this point, and then we should go on and break new highs above this previous swing point. And I'm targeting long-term this 2.20. We'll do the math, those Forex trades. 66, 76 is 1,000 pips. 86, 96, 06, 16, 26, 36. So we're looking at about 4,500, 76, 86, 96, 06, 16, 5,400 pips, 5,400 pips. Well, Gary, does that mean I could just buy the Euro New Zealand and expect it to go in my favor every day up and until we finally reach this 5,400 pips later? No, because of the cycling time frame. But you will be able to scale in multiple times as we go from swing point highs to lows, swing point highs, and I'm getting new lows, highs, higher lows, working on a higher high. My weekly is forcing the daily to start to turn back up. My weekly Kraken has just been released. That's a huge development, forcing that this will definitely go higher. It's just a matter of, as the daily continues to cycle, in the coming days, we're going to expect it to do what? Once it tops and rolls, it's going to slingshot higher and higher in the coming days. So it'll give you multiple entry points to get a piece of that 5,400 pip trade that, again, will last more than a year to get there. We're probably talking at least 2017 as we're in the third month of this year, 2016. So yes, it's longer term, but it doesn't prevent us from making hundreds of pips per day along the way. And these pairs are very volatile. It's already moved over 75 points, 75 pips. This is the 5th decimal place, so it's 75.7 pips so far since this weekly started, and that was part of our scenario of looking to buy that dip in this overall uptrend. Everybody good? So look at the the Euro New Zealand as one that will deliver upwards of 5,000 pips over the next year. And what is this? If I trade this on a regular basis, buying the dips, you can make tens of thousands of pips on one move that moves 5,000 pips. Why? Because it's not going to go in one straight line. And I'm going to scale in. It moves hundreds of pips, take profits. I can even trade it down hundreds of pips. 100 pips up, hundreds. And as it stair steps based on the cycles of the software, it will bring you to the destiny of where this is headed. Well, the only way this is going to break down and start heading lower is my daily needs to turn back over. And as the daily turns over, this weekly needs to turn over. And as the daily and the weekly both turn back over, then we could potentially see the monthly turn back over. Well, that takes weeks and it takes months before that could possibly happen. So in the interim, I take it one day at a time, one trade at a time. Also mention the pound New Zealand. This is another one that is earth-shattering. Yes, the monthly is still headed down, but notice it's starting to show signs of flattening out. It hasn't officially made its turn yet, so I can't say I guarantee that this is the bottom reversal, but that's the whole point. We watch how this monthly is going to react to this weekly's movement higher. The weekly is just getting started to the upside. So this is another currency pair that I should be buying dips than rather selling rallies. And if I do decide to sell any type of rally, then it's going to be based on a quick scalp, and I would not be in it for days. I would simply be in it for maybe a few hours as the cycles are going down and I can get a piece of it. But notice the daily, its behavior. This is important for everyone to learn. It's so easy. Since my weekly, well, everybody says, well, it's a trend line, Gary. Of course. We're bouncing and we're bouncing. We're going higher, and this trend line is holding. But notice since the weekly has bottomed in reverse, trend momentum up, PAI bottomed in reverse, PAI headed higher, what signs and symptoms have my daily exhibited? And we anticipate this in advance. Well, when the daily's bottoming and reversing, we expect price to move higher with the weekly. My daily tried to slingshot lower, expecting it to fail because it's doing what? It's moving against a weekly moving up, and the weekly did not move and turn over. So this was the trade alert. Hey, buy that daily slingshot when it fails. When this baby turns and hooks back out, you want to buy that. And here's where we purchased this, and we told everyone to buy it down here at around 208, and it rallied up about 500 pips to 214. It's working its way higher on that failure. Well, it's doing it again. So here's another buy opportunity. The daily tried to go down again, and when it's moving down, that's part of a scalp. And I can scalp that lower, right? Easily scalp that lower, but I know it's going to fail because my daily turned against and started moving lower against a weekly moving higher. So this is a sign and symptom in advance. So ladies and gentlemen, I give you advance note warnings days in advance what it's expected to do, and I paint the Picasso of what the software is going to look like when it gets there. And yes, we're just getting started back to the upside, and we still have a little room left to go. The previous high was sitting at 214.80, so we're about 100 pips from the previous high, and we're going to go on and break that high. My daily's failing, going higher. My weekly's going up. So we're not going to go breaking any lows now. We're going to start to break highs, lows, and get higher lows, higher highs, higher lows, and higher highs. Well, now we're in the midst of a cycle, my 4-hour cycle from oversold back to overbought, and it forced the daily to disengage and continue higher. So guess what's a coming trade alert? I'll give it to you right now. As long as my daily trend momentum is pointing up like this, and my weekly trend momentum and PAI are up, When my 4-hour finally decides to turn over and push sideways to lower, turn over, push sideways to lower, it will in fact go on to slingshot higher, because it's going against the daily that's headed up. And that's what it's forced to do. Only one of two things can happen. My 4-hour can turn over, my daily goes with it, or my 4-hour turns over, goes against the daily, and the daily says no. When the daily says no, the 4-hour will be forced to slingshot back up. And it's going to be forced once again in the coming 12 to 24 hours for this baby to slingshot back higher. So in the interim, those students that are in class and hear this, then I would be peeling off a little bit of profits, because my workforce, remember we talked about the workforce, 1530 1 hour, is moving into overbought territory. So that's a sign to start peeling off a little profits. Otherwise, I'm expecting to get another higher low and a higher high in the coming hours and the coming days and the coming weeks. So the next big trade that sets up will be this 4-hour. Once it finally turns over, heads down, that's when the daily will be viewed and said, okay, are you going to turn with it? Are you going to go up? If not, and it says up, then we buy 4-hour slingshots over and over and over. And 4-hour slingshots are nothing to take lightly, because they make literally hundreds of pips. And even on these volatile pairs, they make 70, 80 pips at a blink of an eye. And you can make literally hundreds of pips per day following the simple cycles of the time frames. Well, if that's not enough to interest you on these longer term moves, there are some stocks we can talk about. And I'll go over here to Amazon. Here's one of my students wanted me to look at, was Amazon. Amazon's in the process of a monthly top and roll, trend momentum PAI down. And yes, it went from a very high price of right at 700, 696, and has moved so far a low of 474. Well, that's over a $200 move lower, and then bounced nicely. Well, imagine what's going to happen in the coming days as the S&P eventually turns over and starts heading lower, and you ultimately see the software giving signs of that now. The monthly is down, the weekly's in part of that retracement higher. The monthly's not taking any bait, saying I'm having nothing to do with the fact that you bounced from 474 back to almost $100 of that $200 decline into the 552 range. Is I'm not taking any sign of that reversal. So guess what's going to happen? The Kraken is being released. What does that mean? The weekly slingshot up is starting to turn and hook out. So that means there's a high probability Amazon is going to stair step its way down toward this previous low of 474. Everybody write that down. 474 is our target for Amazon to stair step lower. Hint, 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 options traders, it does not mean it's going to go lower every day. We might even have a few up days along the way, and I expect to have some up days along the way. But for now, and I'll put this as green. Let me change that to green. I'll change that to green for support temporarily anyway. And that is the projected path for Amazon, simply by following the cycles of the time frames. And this is a big sign and symptom it's starting to fail. So it's a high probability it's going to come down to this low and even make a new low. Well, first thing we need for the daily to cycle down. The daily starting this process of cycling. And yes, it's cycling down. And we got yet another sign of that with a high, a low, a lower high. And we're working on that lower low when the markets reopen. So could we see a little bit slight rally here? Yes, but when the S&P turns over, the Dow turns over, you can be assured that this will continue lower based on the cycles. So for now, my bias is my weekly is starting to turn and hook out. So I'm going to continue to watch that as my daily starting to move lower. And the interim next up would be the 4-hour to finish its cycle and then the move back up. So how does that help me as an option trader? If I'm short-term option trading and I know I'm going to get a big spike in price one direction and it's going to last for a day or two, I'm going to cycle with the lower time frames. And once the lower time frames, like a 4-hour, starts to cycle against the move and my daily perhaps turning with it, then you better get short out of the short and go long. But that's how you can use the software to know whether I should be a long option play, a leap, or should I be giving a short weekly option. What type of option should I be using based on the cycles? That's where the different time frames come in. And as long as my daily continues lower, the only way that we can get another up move on this daily would be for this to turn in reverse. Everybody see it? Well, the daily turned in reverse, and when it turned in reverse, why in the world did it make a lower high? Well, the weekly started to turn and hook out as well, and my daily turned and reversed with it. So as long as this PAI is pointing down, the trend momentum pointing out, we're not going that way. We're going to be going this way, and I'm going to watch signs for, well, Gary, the only time I have a possibility of Amazon bouncing is when the 4-hour bottoms and reverses and starts heading higher. Up and until then, there's very unlikely it's doing anything like this. It might give us a little blip, but it's going to be the lower time frames blipping, cycling up. So yeah, we're going to get a little slightly move towards the sideways to higher because my workforce is cycling back to overbought territory exactly where we desire their location. And what happens if my 4-hour stays pushing lower? Then guess what it's going to do to this 1 hour? It's going to force the 1 hour to turn back down and move back down in a slingshot down. So those of you that day trade, perhaps, you can use slingshots to day trade. Now, let's look at some other things we have in options. We have numerous templates within our portfolio. Here's what we call a bracket pending order. Bracket pending orders allow you to set a bracket on a high price and a low price. So for those of you that are day traders, for stocks, for example, you can set the high and the low. The first 30 minutes is usually, I use an hour time frame. I look at the first 30 minutes of stock trading. I look for the high and the low, or even the first hour. And once I get a high and a low, I can go in and set this bracket order by simply placing this and setting it up. And this is on any stock, future, commodity, Forex, you name it. And you go into this process and you would tell it right here based on that bracket order, where do I want price to go long and where do I want it to go short? So that once I place the bracket, it arms it and says, okay, if price rallies up and breaks that level, I'm going to go long. If it rallies down and breaks it, I'm going to go short. That's called a bracket order.
It automatically enters.
And automatically enters, takes profit, does everything for you automatically. Manages the trade. So, there's other ones in here, not just, Amazon, Amgen. Amgen's another one. Amgen's a great stock. I used to be a consultant for Amgen. It's in the process of the monthly going down. What happened? We got a monthly slingshot up that failed. It's turning and hooking back down. So where's Amgen headed over the next several weeks to months? Back down toward this low sitting here at 130. We're at 145. Well, does that mean it's just going to go straight down from 145 to 130? No. It's going to stair step its way down. And there's no way Amgen's going to go up heading this way and break new highs without the monthly turning. So when would the monthly turn? You're starting to get the rhythm. When the weekly bottoms and reverses. Well, until the weekly bottoms and reverses, we're not likely to see that. My weekly is still flattening out a little bit, but still headed down. So what's the trade on Amgen? We're going to watch for this daily to start to depressurize, and we're going to look for an opportunity to sell Amgen. Right now, it's running in the resistance here at 145.60 range. And if it's able to break that, the next level is around 148.50. So if I see this daily depressurize further, my weekly stays down, at which point I get a daily slingshot off of this either support zone here, or resistance here, resistance at the bottom of the cloud. Then I'm going to look to sell it, expecting it to follow in the directions of the weekly lower, which in turn will follow in the directions of the monthly lower. Well, Gary, in the coming months, what should happen? My weekly should depressurize, give a nice hearty rally, but then end up with a lower high and another lower low. It should start to stair step its way down in the coming months. So all eyes, again, every time my weekly returns and reverses up, you check out to see what the monthly is going to do. If the monthly goes with it, great. If the monthly says no, then you know the weekly is going to be forced to slingshot lower. And in this case, when my monthly is down, my weekly tries to slingshot up, fails. It bottoms, reverses, and it was forced to slingshot lower once there as price rallied up to a high here sitting at 152. And then it slingshotted to a new low at, sitting there, 139. Options traders, can you make any money off of Amgen going from 152 to 139 in a matter of a few days, a weekly option? And why is that? Because my weekly's depressurizing against a monthly going down, and as my daily starts to top and roll, I want a piece of that action. And I know it's going to be a few days as it cycles back down.
As we said, never a dull moment.
Never a dull moment. So there are so many components we hadn't even begun to start to talk about with the software, but this is just the basic scenario here, looking at the trend momentum and the PAI. And it's simple rules. When the trend momentum PAI are up on a daily, we're looking for this to climb a little higher. So Amgen could take the drift of the S&P climbing a little bit higher, but we know based on a monthly in a downward direction, it's going to end up with another lower high and another lower low. The only way it can go on to make a new high and continue making new highs is with the monthly changing direction. And ladies and gentlemen, if it does not change directions, it's not going to happen. That's simple. So yes, my weekly did move from overbought to oversold. That's why we're moving these big moves on Amgen's. They're stepping lower in the process. And with this most recent development, the monthly turning and hooking out from this swing point lower high here, the bias is it's going to go on and make a new low below this previous low here at 130. Well, Gary, does that mean it's got to do it in a day or two? No, we're talking this is the monthly time frame. Well, when do I get in and start to look for the short? When I have my daily starting to reverse directions. Until then, I'm looking for this to climb a little bit higher. And if I can close the daily above this 145.60, then I'm going to look for it to run about $2, a dollar to two, say between $1 and $2, to run toward the bottom of this cloud. At which point we should see the daily start to turn over. But that's when we'll reassess, following the cycles. So does that start to whet your appetite? There are numerous opportunities in here, including the trade management system. That bracket order we talked about, there's a breakout. And I'll show you some results of the breakout that we use. What's a breakout? That's when we use the London breakout. So what's the difference in a bracket and a breakout? Well, the breakout is I can set in advance when I want the high and low to be deciphered and designated. So for example, those of you that trade Forex and like the London session, we call that the London breakout. I can tell it in advance. So when I'm at home after work at 7 o'clock at night, I can set the parameters for a breakout order. Right? So you just go up here and you go to breakout pending order, and I can tell it on the hour time frame as I update. It will automatically tell me what the high and the low is for whatever candle I designated to do so. So how does that work? Well, you simply go into your properties and you scroll down here and you tell it what time frame do you want this to break out. Good news is, students, we have students from around the world representing 113 countries and counting. And it doesn't matter your time zone, whatever your candle, your clock says on your computer, you would set it to that time. And extrapolate, okay, in my time, it's 17 hours. Is where I want to set it for my breakout time. Or in my case, in my central time zone, I set it for 2 a.m. Well, if I'm Eastern time, I would set it for 3 a.m. If I'm anywhere else in the world, I set it to my local clock time. And that's where I put this level in here. So what does that mean? That means when I set it in here, as it's ticking up and it's 2 o'clock in the morning, it designates that 2 o'clock candle, and then it starts to calculate what that high and low is. And you can see previous highs and lows on that time frame on this chart. So again, 7 o'clock, 8 o'clock at night, I don't want to stay up till 2 o'clock in the morning or 3 o'clock in the morning. So I set it in advance, and it'll automatically pop in a high and a low. Once that hour candle closes and it designates the high and the low, it pops in a pending order to go long, it pops in a pending order to go short. and the trade management system automatically. So then if it goes up and hits the high of the session, it'll enter your long and OCO, cancel the short trade. If it goes to hit the low of the session, and then it'll enter the short trade and cancel the long trade. Well, we're so far developed beyond that because the time frame's cycling, this software is an AI, it designates and looks back and communicates with other time frames. So you can set it in advance knowing, well, my daily trend momentum and PAI are up on this pair, and I don't want to trade it to the downside, even though it may break the low of the session. I don't really want to go short. I want to go long. So then I can set it in here and within my setup and say, okay, I know based on the cycles of those time frames, I don't want you to go short. I only want you to go long. So here it says take out break trigger long or trigger short. So if I know, ladies and gentlemen, I'm in an uptrend, my daily trend momentum PAI are up, and even though my 4 hour might be getting a little dip during that period, I don't want to go short because it hits the low. I want to go long once it takes out the high, so it'll pop in just your long trade. It'll allow the short trade to go because it never placed it, and when price reverses and takes out the high, it enters your long by simply telling it false here. I don't want to go short because my time frames, my daily, my weekly are saying we're going higher. Then I simply tell it not to take the short. Totally customizable. And in an uptrend, of course, you don't want to take the shorts. In a downtrend, you don't want to take the longs. And you can simply set it to false on the longs. And it's endless. And why is this so important? Because it gives you the power to know whether you can anticipate future market conditions before they happen by simply following simple cycles of time frames as they cycle from oversold to overbought. And during that cycle, they give you very specific signs and symptoms as they're unfolding. So let's go back and start back to show you some results. All right. The results include, here was a trade on crude oil, $17,200. I made $2,000 plus on corn simply by utilizing the automated trade management system. It took this slingshot short, and then it stayed in the slingshot because it's expected to continue to slingshot lower. And we know what happened to oil prices when it was sitting here at $41. It went all the way down to $26 before it was done. And by simply setting the automatic trade management system. Some of those bigger trades, the pound yen and the pound New Zealand, $99,000 on a standard lots, $197,000. Each one of those made a 2,500 pip move. Here's the breakout I talked about in action. I set it during the London Open in advance, and it popped in a long and a short trade. We broke the low, it placed the long trade, it placed the short trade, it canceled the long, stayed in the low, and we're up over 200 plus pips simply on a breakout. And as you look through these are several breakout trades that were placed from November through mostly in November, a few days in November, and look, over $10,000 simply placing this breakout trade, automated trade management system. Very simple. So whether you're at your computer and do it yourself, or you want to use this trade management system in a demo account to help you train, learn while you earn scenario, you can use the system to work for you, or you can use the system as a training tool. Either way. Here's some more. The pound yen, that was the pound New Zealand. Here's the pound dollar, over 142 pips. A little more volatile, or less volatile than the previous pair. That pound New Zealand is much more volatile. The pound dollar is a little less volatile, but the same scenario. Had a breakout to the downside, automatically placed. This trade was set about 8 o'clock at night and took place at 3 o'clock in the morning. And there you can see the success over and over and over by simply setting, forgetting, and letting it do its thing. Some of you that might have attended previous webinars, I'm proud of showing this, and I will continue to show it. One of our students made over 8,600 pips and counting utilizing the MPA-PE software, and he traded in his TradeStation platform. And it's multiple trades totaling 8,600. Because the monthlies and the weeklies were in line with those trades, he went on to let it run. And he goes on to talk about that 8,000 went up to 18,311 pips and counting. And yes, we have a scanner called the Slice of Heaven.
We have two scanners, actually.
Two scanners, but one of them specifically looks for the setup of the higher time frame, and it's customizable. Well, what if I'm a scalper? You can set it on a 4 hour, 1 hour, 30 minute. You can set a 30 minute, 15, 5 minute, and everything that's setting up together aligns, and it gives you a printout on the scanner that runs on the hour every hour. And this is what he utilized for the monthly, weeklies, and daily time frame, and he was able to generate 18,000 pips and counting. And here's that same picture in his TradeStation account, over and over, multiple trades, tallying upwards of, if you tally all these numbers, 18,311 pips. Now, just so we know, we haven't covered any of the software really. I wanted to give you some overview of some markets that are ready to move. And if there's anything else at the end and you still want to continue, I'll light up some more charts for you. But here's what comes in the software. You get the automated breakout trading I just mentioned and showed you results of. That's where you can set your time to any candle in advance, and it will automatically set the high and the low and calculate that for you. And once that candle closes, it pops in the high and the low. Then it'll generate a pending order buy and a pending order short for those of you that want to trade both either or, breakouts either direction. The automated bracket trading is where the difference in the two is similar type system, but it's where I know in advance, not based on a time frame or a candle closing. I know in advance my support and resistance levels, and I'm interested to park a pending order when the resistance breaks to go long, and I'm interested in parking a sell order when it breaks support to go short. And again, it's OCO, so if I enter long, it'll cancel the short or vice versa. So it's all customizable. It includes the Ichimoku automated trading. Well, Gary, you really didn't get into Ichimoku automated trading. Well, there are rules with Ichimoku, and we teach it in our class, that these lines, let me go back to screen share real quick. These lines on the Ichimoku act as support and resistance. That's what they stand for. So when price is above and they touch, it should act as support. When they come from below to back up, it should act as resistance. That means I can set with this trade management system a pending order to know when price is starting to head lower, and I have my lower time frames like my 1 hour starting to show slingshot, my 30 minutes starting to bottom and show slingshot. I can set it for a quick scalp to say, okay, when you come down and you touch that line, I want you to buy and go long, or vice versa. Because my time frames are topping and rolling, I can set it a few points below this level so that if it breaks the line and I know my time frames are cycling in a downward direction, I can set a pending order to sell. So that's what I mean by an automated Ichimoku trading system. I can set it on this Ichimoku chart, and those of you that know anything about it, great, then you understand what I'm talking about. Those of you that don't, you'll learn in our classes, and we even tell you where to set them. And we did that with oil prices. We did that with numerous other ones and pegged them perfectly for that reason, because we were able to set it up in advance. All right, so let's continue. So what else comes with the software? So those of you that may have tried the software years ago, it's a totally different game now. We have the market scanner. This is where I can customize it to put in any symbol I want. So if I want 3 stocks, I want a few commodities, I want Forex, I want gold, silver, S&P, Russell, I can schedule and manually customize the scanner. And what does it scan? It scans all the time frames, telling you where we have buy signals, sell signals. It tells us when we have slingshots forming and engaging, and what time frames. When we have triggers to go long and short, it gives you everything you could possibly want in a scanner. Now the difference between this Slice of Heaven Finder, this is where it will randomly scan all symbols within this platform and tell us when my weekly, daily, monthly, 4 hour, 15, 5, whatever time frames I set it for, it will automatically tell me when they're coming together. So for scalpers, we can set a 1 hour, 30, and 15 minute time frame. So when the 1 hour is up, the 30 is up, my 15 is starting to bottom, I can go long in the direction of 30 and 15 for a quick scalp. Longer term traders, when my monthly weeklies are bottoming, as I showed you on some of the pairs, and I'm going to show you that euro yen here in a second, just to continue with the process of massive moves on the horizon. It's setting up with the monthly, the weekly, and the daily all starting to show signs, early signs of perhaps the beginning of a massive thousands of pip move in the coming months and probably through the next year. That's just the beginning. We also had the slingshot trade triggers. So this automated trade management system can, when the time frames align, give you a trigger to sell. When the time frames align, give you a trigger to go long. I can set it in the trade management system to tell it I want you to buy the trigger long. I want you to sell the trigger short. I want you to sell the slingshot short. I want you to buy the slingshot long. All automated for you. Still going. Then we have the MPA slingshot. That's the triggers, and now we're talking the actual slingshot itself. I can tell it to sell slingshots or buy slingshots. So once it turns and is forced to engage up, because my daily and weekly are higher, my 4 hours forced to engage, I can tell the system to enter the trade once it engages, and it'll enter the long trade for me accordingly. And finally, we have 4 MPA trade management systems, of which you saw briefly a couple. You can do the breakout, the bracket, the automated instant order, and there's a pending order. So that makes the 4. So whether I'm going to use pending orders or I'm going to enter it instantly, you can use any one of those 4. Part of the trader package, we include the software. We include the master MPA live trading classes that are invaluable, setting up, teaching you how to trade, when to trade, why to trade, take profit levels, targets, everything you need to know about trend channels, trend lines, Elliott wave, Fibonacci's, you name it. And I can show you any trading system in the world that works, doesn't work, and how and why they work and how and why they don't work, simply by throwing on my cycling time frames to dictate why and when those failed and why and when anything would have succeeded based on the cycling time frames. And of course, we do include trade alerts. Those are invaluable tools. They're much more than just buy and sell levels. They give you education on not only learning the software, it teaches you how to trade in general, and it paints the picture of the Picasso we talk about, where we tell you the weekly's headed down, my daily's bottoming and reversing, and so far all signs lead to sell the daily slingshot, and we tell you exactly when to do it, when it engages, etc. So those what the alerts will do for you. Now, special offer number 1 includes an annual membership for 1 full year. It includes the software for 1 year. It includes the live trading classes for 1 year. And it includes the trade alerts for 1 year. If you sign up tonight, Trish, will you post that link, the annual link? If you sign up tonight, we're going to give a bonus webinar where we go through and tell you everything there is from A to Z. I mean, from start to finish, everything about the software and then some. Bonus number 2, you'll receive 12 special coaching classes. We're going to have these specially set up along the way. As we see these big trades setting up, I'm already calling attention to those special trades. And these are the ones we will together formulate strategies to take care of these 5,000 pip moves, the $200 stock moves, the S&P top and reversal, 100 plus pip point move down, and then if it ends up being the market crash, that one Elliott wave count says that the S&P is going to go down below 600 and below, along with the market crashing, etc. We have signs and symptoms of that not only in the software, we have critical make or break levels, support and resistance levels that will come into play, but all that will be covered in these special classes. We'll throw in 2 complimentary months to your membership. So we'll give you 14 months of software, of trading classes and trade alerts. And normally the annual subscription is $4,997. We'll slash that price by well over $1,500 and bring it down to $35.64. If you average that out per month, ladies and gentlemen, that's $297 on the 12 months. You make it 14 months, that's less than $297 a month for software, live trading classes, and trade alerts. I dare say you won't find that anywhere. This software alone is one of a kind you will never find anywhere. You'll notice our trading classes are unique, unlike anything you've ever seen, and wait till you get a load of the trade alerts. They're a teaching tool, and they're very, very highly profitable trade alerts as well.
And we have a lot of fun.
So if you would like to participate in this annual offer, including the 14 months, including the 2 different complimentary months here, you will sign up under this link Trish has posted, the gpatrading.com/annual. So if you want the annual, including the live trading classes and the trade alerts, sign up via this link. 1 second, I'll post it. All right, there we go. So the gpatrading.com/annual is for the software, the live trading classes, and the trade alerts. Software classes and trade alerts. Now, for those of you that are more experienced, and perhaps you only want to get a load of the software by itself without the classes and without the trade alerts, then you can sign up under bonus special offer number 2. You still get the orientation webinar. You're going to receive 4 special coaching classes. I will still throw in the 2 complimentary months, and this normally is $24.97. I'll reduce to $19.97. So that's less than $197 a month. That would be for 10 months, and you got 2 months free plus an additional 2 months, so you're getting 14 months. So that brings it down to $142 a month. Now, where in the world, if you average it out over that 14 months, one $19.97 payment, you'll receive for $142 averaged out over per monthly. Where in the world are you going to find that for this quality software? And in fact, as an additional bonus that's not even on here, if you sign up tonight, I'll throw in trade alerts free for that full 14-month period. I'll throw in the trade alerts for the same low price of $19.97. So if you want to participate in that special offer, you'll use this link, the gpatrading.com/premium. If you want to take advantage of the class, trade alerts, and software, which we highly recommend because you'll get added step-by-step instructions during class, and additionally with the trade alerts, you'll do the gpatrading.com/annual. But just to let you know, I do thank you for attending tonight's webinar. Please keep in mind what the MPA software stands for. It's the Market Price Anticipator software, and it is and stands for empowers you to read and anticipate price and any financial market on time, in time, all the time. Remember that. Empowers you to read and anticipate price and any financial market on time, in time, all the time.
What more could you ask for?
What more could you ask for? And as I briefly mentioned, here is a copy of our world map that is located on our website. It is, in fact, shows all the countries around the world that are part of our program, and they show over 113 countries and counting. All right, so let's go back to the screen. I'm going to show you this. Please keep in mind that this is another mega trade. As we've been talking about mega trades along the way, we have several of those setting up. So now, as I mentioned in the overall review, this increased market volatility is the best time ever to start trading. So with this, we have this set up. So Justin Burns, here we go. Part of this process, remember I talked about this where we look for a Fibonacci style retracement. This was part of our trade alert that went out looking at the euro yen, that this daily slingshot should fail, and we were targeting this 27.75 area. Well, we came close. Hundreds of pips later, we came close to that initial target. Now we're in the process of pulling back because the daily's turning back over. Well, part of the reason that euro yen is setting up is we believe the euro yen has a bottom reversal intact, and we're in the early stages of a major reversal back to the upside. So during this retracement, is it over? Well, the monthly is starting to show signs that we're getting signals that yes, this retracement down, if it's not over, it's very close to being over. And once it is over, we're going to look for this to rally back to new highs And remember that little ratio I gave you a few moments ago? I said that if we're able to retrace into the sweet spot, a 23.6 to a 61.8 retracement zone, I call the sweet spot, and it goes on to then move higher based on the monthly turning up, which we're starting to see early signs, not quite full turn yet, but we're working on it, that we would see price rally back towards 149.76. 125 to 145 is 2,000, 26, 27, 28, 29, 30. You work your way up. That's a couple of thousand plus pips, 2,500 pips. And once we break that, there's a 161 target sitting here at 184. So you do the math. 25, 35, 45, 55, 65, 75, 85. You're talking again well over 5,000 pips moving towards this 184 target. Now, I'm not going to tell you it's going to end up here by next week. No. The monthly is going to need to turn, and it's going to move from oversold toward overbought. The PAI is going to move from oversold towards overbought, and it's going to rally and start to stair-step its way, taking months and months and months, and I would not be surprised to see it take into 2017. But again, a 5,000 pip move can extrapolate to tens of thousands of pips along the way, selling and buying options as we go through the process of stair-stepping and correcting. So because the monthly is in the early stages of turning over, my weekly starting to bottom and reverse as well. Well, Gary, it looks like it's starting to flatten out a little bit. Right. That's why I'm saying at this point, I can't guarantee this bottom is in place yet. But based on a weekly that was turning up last week, and based on a daily slingshot that started to engage down against a weekly going up, it's projected to fail. So when it failed, turned and hooked out, that was your trade alert to buy and go long. And I have numerous students from around the world that took this trade and made hundreds of pips. Notice from its low down here at 123, it rallied to a high of 127. That's 400 plus pips. Right? Simply on a daily, knowing this daily was going to fail, because as my daily was engaging down, turning over, that's what we call this engaging. The red hooks, blue flattens hooks, green does it. As it's in the process of doing this, Justin, we knew the high probability it was going to fail. And why did we expect it to fail? During the process, when it started to turn over and head lower, my weekly was doing what at the time? Red up, blue up, green up, straight up. Left of this line, where the process started turning over. Then from the point in which it failed, turned and hooked back out, what is the weekly still doing? Left of this line, it's still red up, blue up, green above the red, not smoking with angle and separation, but it still was up. Trend momentum PAI up. So we anticipated in advance, while we got a nice little dip here, that was one to buy. Fair enough? So again, this long-term projection, what can we use this for? We can go from the monthly to get direction. We scroll down to the daily to tell me what direction I should be thinking about trading in at the moment. And then when the daily reverses back in the direction of the monthly, you want to get all on that one. And then you can drill down to the 1 hour. There are numerous times when you can scale in on the lower time frames. Yeah. Well, I've seen others, and I'm sure you've seen this, DeMark trend lines. What are DeMark trend lines? They're trend lines, and they're targeting counter trend line breaks. Well, nothing is more powerful with a counter trend line break than when the time frames are aligned in the same direction. So not only did we start to break that 1 hour trend line, and we closed above it, but what happened? My trend momentum and PAI are up on the 1 hour. They're up, let me turn the auto scroll off. They're up on the 30 minutes. They're up on the, as we're breaking, we're up on the 30, we're up on the 1 hour, and check out the 4 hour. The 4 hour is slingshotting higher. That is very powerful to know that whether I'm using trend line breaks as my method to get in trades, I'm using reversal patterns, I'm using Fibonacci retracements. How do I know it's going to go to this 38 and not bounce and go higher? How do I know it would go to 50 and bounce, or right here and not bounce and go higher? Or maybe the 61. How do I know? When that 4 hour and 1 hour all join forces, that's when we can start to talk about my Fibonacci retracement is over and we're starting to go higher. And why would we expect this to go from a higher low to a higher high? Notice what direction my daily's in. It's still up. And that's right where we started to get this failed slingshot moving higher. And that's exactly the same point my 4-hour started to engage. See how the time frames communicate and they talk with one another? So when I do decide to use the automated trade management system, again, I can go in to my automated trade management system, for those of you, and I know we're barely touching on the surface, but as we go through, you can tell it to trade a trigger long, trade a trigger short, buy a slingshot long, buy a slingshot short, sell it, buy it, whatever you want to do. And then we have different types of triggers. Well, what is all that? We haven't even mentioned those. That's the MPA slingshot trade triggers. They look like this. They give you triggers to sell and triggers to buy. And nothing's more powerful when I get a trigger that's a buy and I combine and it communicates to say, hey, not only am I in a bottom reversal mode, but notice on the bigger time frames. I have a monthly starting to show bottom reversal. I have a weekly starting to show bottom reversal. I have a daily that showed a while back, days ago, a bottom reversal with a trigger higher. So what does that mean, Gary? That means when I go to that trade management system, I can say, hey, as we're moving lower, 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 my daily's going into oversold territory, my other time frames are starting to reverse. I can say, when you trigger higher, I want to go long. Boom. It'll enter that trade accordingly. And we have all the templates. They're enough to keep any man busy. Simple templates to more advanced templates to trade management templates, all throughout. Slice of Heaven Finder. What's a Slice of Heaven Finder? Remember, Slice of Heaven is simply the scanner. All I got to do is select the template. It starts to set up, and it's going to scan my currencies, stocks, futures, commodities, whatever's in this market watch of this platform. It'll scan every symbol, and it'll go through the process. Now I did the euro, it's doing the pound. It'll go through the market watch of all these symbols, Facebook, different stocks, futures, commodity, Dow, S&P, whatever's in here. It'll scan through those symbols and tell me when the 4-hour is starting to set up. Well, that's just the beginning. Oh, let me close that too. That's just the beginning. That's the data field, and close this. That's the beginning. Well, what if I'm a longer term trader? Well, I simply go into my properties table, and under inputs, I say, well, I don't want to base this on a 4-hour, 1 hour 30. I want to base it on a monthly, a weekly, a daily. Well, you set the tone when it ticks, which has to do with the monthly, weekly, daily. And what if I'm a scalper? Well, then obviously I'm not interested in when the monthly, weekly, and daily, although you should be, because whether you scalp or not, why not scalp and make thousands of pips as opposed to scalp and make 2 to 6 pips? But I can do the same thing with the scanner. I can go in here and say, okay, instead of a monthly, daily, weekly, I'm going to go in and set it up, and I'm going to do a lower time frame. Whether it's a 1 hour, a 30, a 15 minute, right? I can set it up here at a 1 hour and set it up, and it'll scan again. Once tick data hits the charts, it'll set up a 1 hour, 30, and 15. Then there's the other scanner I mentioned to everyone that I can set up, and it's the currency scanner, and I can use any other symbol. But in here, let me move this out of the way. I set up a scanner, and this is preset where I have 4 currency pairs, euro dollar, pound dollar, etc. In it, it gives me when do I have triggers long or short, what direction is the trend momentum, what direction is the momentum on this time frame, is it up or down, and of course, when there's any slingshots forming and engaging, it'll show a little SS on here as well as it starts to populate.
You can customize it.
And again, the same rules as I just showed you a moment ago. Well, what if, Gary, I don't really trade currencies and I want to trade something else? Whatever symbol is in that market watch, you can add it. And under inputs, I can change and add them simply by dropping, dragging it on the chart. So if I want the S&P, I want gold, I want oil, stock, anything in here is 100% customizable simply by going into the Inputs tab. All right? So that's what we call Market Scanner number 2. And as you can see, it does tell you when the slingshots are forming and getting ready to engage, the direction of the trend per time frame, and when those triggers based on the time frame are setting up. And the dollar Swiss is showing a trigger to the downside on a monthly on the US dollar Swiss dollar. So you can bet the dollar Swiss is going to head lower for a period while my monthly is triggering lower. Okay?
For those of you that don't trade Forex, you need to add it to the mix.
And those of you that don't trade Forex, you can add it to the mix and set your own template. It's very easy to do, and I can set this to anything, any symbols I want, as I just mentioned. And there are numerous platforms in which you can utilize this. And this platform we have, whoops, let's go over here, the Market Watch. There are literally over 800 symbols, including stocks around the world, commodities, ETFs, you name it, that are in this platform, that if I want to set it to any other symbol, stock, commodity, future, whatever, I just drop and drag it on the chart and it'll change it. So for example, let's throw in that's a Swiss futures, bonds. There's everything under the sun in here. A huge section of stocks. So say you want to look at McDonald's, for example. All I got to do is drop and drag it in there. It updates. There's McDonald's. And what is McDonald's about to do? Well, my monthly's in overbought territory as it's retesting highs. It doesn't mean it can't go higher, but it's getting toward overbought territory. So it's going to start to show some limitation. My weekly starting to slingshot up. Is it going to break a new high? This is going to be a good one to watch here. If this weekly turns and hooks out and McDonald's makes a lower high, then expect McDonald's not only to turn back over, but to make a run toward the previous low since this started upwards down here about 113. So about a $10 decline coming on McDonald's should this weekly turn and hook out. Well, when is that likely to happen? When my daily starts to turn over, early stages. So ladies and gentlemen, McDonald's is going to do one of two things. My daily is going to depressurize against the weekly, and the weekly is going to say no, and then it's going to force the daily to go higher, or the daily is going to start to turn over as McDonald's moves sideways to lower, and the weekly is going to go, okay, I'm done, and turn and hook out. So again, if it does turn and hook out, Justin, I'm looking to expect McDonald's to start to stair step lower towards this 113 previous swing point. Where would I take profits? Ichimoku, when I'm above and I come back towards the goal line, I want to take profits around 118.74. And if I'm able, my next target would be my 112 range, 114. Let's get the 112.68. And if I break that, then I'll continue to look for the next low around 110.28. All that's built into this platform is built into this template. So all I need to see is this weekly give up, turn and hook out, and look out below for about a $10 drop, taking profits again at this 118.74, followed by my 113 range, followed by my 110.28. And those are built-in targets automatically based on the software. How cool is that? So in closing, I'd like to say thank you for your time and attention. Trish and I would like to thank you for the time and attention. Again, just as a review, special offer number 1 is less than $297 if you average that out over a 12-month period, which is unheard of. So again, I'll give you the exact amount. You take the 35.64, you divide it by 14, since we're throwing in 2 additional months, that brings it down to $254.57 averaged out per month. So one payment of $35.64 gives you 14 months of uninterrupted service of software, trading classes, and trade alerts. 12 coaching classes where we will pick up all of these mega trades setting up and any other special requests. And of course, slash pricing from $49.97 down to $35.64. Use this right here, gpatrading.com/annual. And if you just want the software only, special offer number 2 is still an unbelievable deal. We will give you for $19.97 14 months of this unbelievable software. And as I stated, if you sign up tonight, I will throw in the trade alerts free for 14 months. And that alone is worth the $19.97 by itself. Unbelievable deal. So as we close, and thank you again for attending tonight's webinar, we'd like to remind you again, why the MPAP3 software? Option traders think, well, I trade options, I don't need software. The software will give you insight when the stock price is due to go lower, when the stock price is due to go higher. And if that's not enough to rock your world, there's even in this platform, the VIX. So those of you that like to trade the VIX, and there's also Russell 2000. So it's endless on the number of charts that you can view. And speaking of the Russell, and I promise you I'll close. I do this in class all the time. I say we're going to get about 2 hours of class. I go 2.5, 3 on a regular basis. So at the Russell, we talked about it making a new higher high, not only going back towards 1095, but the next stop for the Russell is around that 1114 range. Russell 2000 chart here, for those of you that trade IWM. Yes, you can go on and trade that as well. So here's where I use this intraday in our last class. One of our students was talking about the Russell 2000 and wanted to know, how can I use to buy this? I know the daily's getting ready to engage, but when can I get in? I can use the lower time frame slingshots. And I drew this cute little trend line here, which we went a little wedge formation. And we win this little wedge formation. And I said, watch as the daily starts to engage. We're going to go on and break the previous high. When we break the trend line, we're going to 1095. And we went on and broke so far and went to 1101. We still have more upside to come. My daily is still headed higher. My weekly is still headed higher, although showing a little sensitivity. But it's still up for now. So that's why longer term, monthly is still down, similar to the S&P. Weekly is turning over. It's expected to make a lower high and a lower low in the months to come, in the weeks to come. So all we need is what? When this up move is over, the weekly is going to turn. And we're not quite there yet. It's changing, but we're still up and we're still up. Still slightly angling up. Green is still angling up. Red is starting to flatten because it's maxed out. So what's the strategy? As I mentioned, continue to buy daily slingshots. Well, if I get another daily depressurized, the weekly still not turning, I'm going to buy the daily slingshot. Well, what if during this next trading session, starting tomorrow, the trading session, my daily stays up? I got the trend momentum up and the PAI up, then I can buy a 4-hour slingshot. And we had a little one here the last session, and it made roughly 1085 up to 1101. That's about 16 points. Traders out there, futures traders, you talk about a point or two with the S&P, the Russell. These slingshots in the cycling time frames, we consistently make 10, 20, 30, 40, 50, 60, 100 points on the S&P, etc. Right? I'll show you that on the S&P. Here was one of the last trades we took on the S&P. Same rules. We knew the S&P was due to go higher during this bearish bounce because my weekly is still up, my monthly is still down, but the weekly is still up. Right? Similar to the Russell, it's still up. So my daily is projected to slingshot higher. This first one, even if you would have got half of that, Darren, Stacy, my low was 1886. I went on to make another high sitting up here at 1968. Wow. That's 70, almost 80 points. Hello, futures traders, 80 points. I know I trade futures and I make a point or two. I think I died and went to heaven. Well, now I'm able to let those 2 points, 4 points go to 10 points, 20 points, etc. in my futures account because I'm watching the cycles. And no, I'm not using the software in my futures account. I'm using this software right here and I'm watching it unfold in my futures account. All right. So here's the second one. When we started to slingshot again, we came down. This is a no-brainer. We came down to test the goal line. When we're above the goal line and we come down to the goal line, it should act as support. And I have my foreman and workforce, 4 hour, 1 hour, 30, all bottoming and reversing, and a 4 hour, daily starts engaging. Well, here we went from a low of 1967 to a high roughly of 2014. Well, what if I'd have made half of that? That's roughly a 40 plus, almost 50 point move. What if I'd have made half of that? Darren, would you be happy with a 25 point move on the S&P in your futures account? Come on. Are you kidding me? So where we're going next is I already covered this. Weekly still not down and out, so I still expect we're going to grind higher. So what's my next target? I'm sitting here salivating, waiting for a little sideways movement, perhaps even a little lower, as my time frames depressurize. And on my first target, once it gives me a buy sign, is to go to 2050. And if I break 2050, my next trade level will be 2080. And how are we going to get there? By simply allowing the time frames to cycle. My daily can stay flat. We've seen that before, where the daily is up and flat and it keeps going higher. Everybody see this to the left? My daily was flat and it just kept slingshotting higher and higher and higher while it was flat as a board up here. Well, it's more or less doing the same thing. So that's why I still think we're going to go to 2050. Got a great chance to go to 2080 and even could go to 21 and then 2120. I just don't think before it's over with we're going to break 2133. And bottom line is we're going to end up with a lower high and a lower low. Lower high, lower low. Fair enough? And again, this euro yen, this is a big one. This is a huge one. And it's setting up its early stages. Well, Gary, like you said, that monthly isn't quite turned. We know it's getting close to it, but it ain't quite physically turned yet. So what if, turn the auto scroll back on, what if this turns over and we slingshot lower again? Good. I would love nothing more for this euro yen to even go a little bit lower first. Why? Because once it's finished and my monthly's turning and the weekly starts a new cycle, then I'm going to have fun buying the dips in the uptrend for literally months and months and months. And that's when the monthly and the weekly join forces to the same direction upside, when we're going to see price rush by 2,000 pips to go back to this 149, 2,500 pips. And likely over the next year, going into 2017, going to see it rally another 2,000 plus pips to rally up here towards about a 5,000 pip rally around this 184 level, which is sitting way up here off the chart. So come back next year during 2017 and we'll say, remember I told you guys it was going to reverse and we're going to slingshot higher and higher and take about a year plus to get up here? Well, guess what? We're here. 5,000 plus pips, and here's my scale ends tallying tens of thousands of pips. That's where those special coaching classes will come in, because we're watching these very closely and these are getting ready to set up. So with that, I will say good day, good luck, God bless you. May the pips be with you. Yes.
Good evening.
Good day, good night, good evening.
Wherever you are
in the world. God bless you. May the pips be with you. I'm humbled and honored to have spent the evening with you to show you this software and to give you some insights that trading should not be difficult. It's very simple if you follow basic rules and you follow the cycles. And I guarantee you will be successful following these rules, as evidenced by thousands of students around the world that have been in our service. And yes, these students have been with us not only for a few months, not only for a few years. The ones that have been around are going on 5, 6, 7, repeat year after year after year after year. That says something about our service, that we deliver and we continue to deliver year after year. So again, take care, good night, and we'll see you at our next event.